What's up, guys? Your reporter QuickStocks is back. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your analysis. So, Square, ticker symbol SQ, trading for $65 a share as of April 29th, 2020. Still down 24% from its highs seen in February. With earnings next week, is it time to increase our position in Square or take some gains? This is your Quick Stock Analysis. Before we get into our expectations for earnings, let's take a look at Square's last quarter as a refresher. From Square's fourth quarter 2019 revenue was up 46% year over year. Full year sales were $4.7 billion, up 43%, and 2019 adjusted EBITDA was up 63% to a whopping $417 million. With a market cap of $28 billion and an insane PE or price per earnings ratio of 80. Even after the most recent correction, it seems many people are still bullish towards Square. Alright, so now for our expectations regarding Square's earnings. Currently, Square only accepts card payments in the United States, Canada, Australia, and the United Kingdom, with the majority of its business coming from the United States in the restaurant, traveling, vendor industry. With restaurant traffic slowing, events and conventions being canceled, as Square shareholders, we should expect to see a decrease in Square's payment processing, at least for the first half of 2020, and potentially for the rest of 2020. And ultimately, the severity in which these regions are affected by the CV will play a significant role in Square's next few quarters. Some reports state that large festivals, conventions, game events, etc. could remain closed through 2021, which would be devastating for Square's payment processing business. And with such a high valuation for Square, if this ends up being the case, as an investor, we should be ready for plenty of volatility. But Square is more than just a POS. And of course, by that I mean point of service. Square also has Square's Cash App, which is a mobile payment service allowing users to transfer money to one another using a mobile phone app. This is also a brokerage. With all of its recent advertising, I wouldn't be surprised to see a large uptick in its daily user base. So it's important to note Square already revised down its Q1 2020 guidance, cutting its revenue forecast to a range of $1.3 to $1.34 billion, compared to its previous forecast of $1.34 to $1.36 billion. And Square noted in January and February they saw a 32% year-over-year seller gross profit, and Cash App gross profit grew 118% year-over-year, which is extremely impressive and why we've seen such a recovery in Square's share price. So we already know in the first half of the first quarter one could expect stellar numbers. However, I doubt it will be enough. Regardless, there's no doubt Square is going to project subpar numbers for its next quarter, which won't have the same benefits as the first quarter did. With this in mind, I wouldn't be surprised to see a dip in Square's share price, which selfishly I'm looking forward to. Currently, we only have a $700 position in Square, which makes up less than 0.25% of our total long-term portfolio. And with well over 20 grand sitting in our account, I'd happily take advantage of any large dips we see in share price, as I have no doubt in Square's long-term prospect. And if we don't see the dip and I miss the boat, that's a sacrifice I'm willing to make. For myself, at its current levels, with such high market volatility, the risk outweighs the reward. And there's plenty of other companies I feel more comfortable buying, but this volatility could end up rewarding us in the long term. Anyways, this was your reporter QuickStocks view on Square Inc. As always, the best investment you can make is hitting that subscribe button to go long on QuickStocks. At 75 subscribers, subscribe now and plan to retire early. Take it easy, guys.